Good morning, good afternoon, good evening, ladies and gentlemen, and welcome to this Digital Middle Eastern FP&A board. Today we'll be talking about how to master rolling forecasts. My name is Hans Gobin. I'm an international FP&A board member, ambassador, and also FP&A Trends ambassador. And today I'll be hosting this meeting. Just so you know, we've got nearly 600, hoping to go over 600 people joining us for this meeting from 47 countries, but mostly from the Middle East and African countries. And we have a great set of panelists as well and great insight for you on rolling forecast. So moving on. So what will we be talking about today? We'll talk about the 3 stages of rolling forecast maturity model. Then our speakers will talk about how they move from traditional budgeting to rolling forecasts, the sort of barriers, etc. they had, key success factors for a good rolling forecast, tactical approach to rolling forecast, a case study we will see. Finally, we will see how technology helps us in doing rolling forecast. We will go on to conclusions and recommendation, and then we will finish off with a Q&A session. So this is a list of subject matters and topics we've discussed in the Middle East. Please go through it in your own time. It is now a good time for me to introduce to you our esteemed member of the panel today. So panelists, if you would please switch on your webcam and come off mute so I can introduce you one by one. And I will start the first introduction by Ahmed. Ahmed is CFO at MFQ Companies, is a board member or director at IMA Riyadh. Lots and lots of experience in different expertise, and as you can see, lots of followers on LinkedIn as well. Today, Ahmed joins us from Riyadh and will be talking to us about how he moved from traditional budgeting to rolling forecasts. Ahmed, great to have you with us today.
Thank you. I'm so glad to be here, Hans. Thank you.
Thank you. Our second panelist is Anand Jocelyn. Anand is Cluster Director of Finance at Grand Mercure and Ibis Style Dubai Airport Accor group chain of hotels. Lots of experience in the hospitality industry, as you would see, and very much into his financial model within the hotels, where he's championed the use of dynamic FP&A and forecasting tools. Anand, great to have you with us today.
Thank you, Ahmed. I'm excited to be in this webinar. Thank you.
Thank you. Moving on, we have Naveen White, who is VP Accounting Hargreaves Communication, now Cable One, with over 30 years experience in engineering roles at TGC in New York. Started her 30-year career. Has led FP&A function for TW Telecom, now Century Link. Championed lots of changes, worked for Live Future Ready, very interesting topic as well. And today Naveen will talk to us about tactical approach to rolling forecast, a case study within a couple of companies she's been with. So Naveen, great to have you with us.
Thanks for inviting me, Hans. I appreciate being here.
Thank you very much. And last but not least, we've got Andreas Simon, who is Director MEA for Jedox, with lots and lots of experience in international business development, sales and technical expertise in EPM, led various different projects in various different countries. Today, Andreas will talk to us about the role of technology in rolling forecast. Andreas, great to have you with us.
Thank you very much, Hans. Looking forward to the meeting.
Thank you very much, panelists. We've got a great 4 speakers today and lots of insight into how to do rolling forecasts, the best practices. Thank you, panelists. If you could turn your webcam off and go on mute, I've got a few more slides to run through before we start our meeting. Just a quick slide on FP&A Trends Group here. Of course, you know, we are in 27 cities, 16 countries, 4 continents. Today, we're trying to bring together Dubai, but the Middle East and Africa as well. And also to highlight that we're also doing best practice workshop and FP&A consultancy on your demand. So what is the FP&A Digital Board? 90 minutes webinar, as you know. We've got 4 polling questions. We need your insight on them, so please vote. There is an interactive Q&A session at the end. You can ask questions starting from now if you'd like via the chat box, but keep asking questions and please direct it to whoever you want them to answer. We will get to a few of them today. Those that we can't get to, we will answer via email anyway, so keep sending your questions. You can network with us directly via LinkedIn. You can also download the presentation in Handout. You will receive a copy of the recording and presentation within a couple of days of the meeting. Finally, when I close this session today, you will get a feedback form, so please give us some feedback, but also tell us, what would you like to hear from us in the future. Very important, so please do that. A quick thank you to our technology sponsor, introduction, Jedox, who of course are modern enterprise performance management tool, one of the smartest platform for planning, reporting, and analytics. Thank you very much, Jedox, for sponsoring this event. I've got a couple of slides that I would like to kind of quickly take you through before we start our presentation. Just a very quick example of what a rolling forecast looks like. And here what we're looking at is an example of a 5-quarterly rolling forecast. It's not a traditional forecast. You can see the red here is actuals and the blue is forecast. And constantly they're running a 5-quarterly model. So if you look at the second review, the first quarter is gone red, which means it's actual. And then what happens, we've got 5 forecasts rolling forward. So not your traditional forecast where 1 month or 1 quarter is actual, and then you look at the remainder 3 quarters. I would like to quickly share with you the 3 stages of the rolling forecast maturity model, which the FP&A board over the years have come up with, polished, and improve, and it keeps improving. I won't have time to individually go through each states, but as you can see, the basic state, the intermediate state, and the advanced state. Much more, I would like to highlight here what the top companies are doing in terms of rolling forecasts. So you would see there the first point, so driver-based modeling. So it is key that your rolling forecast is driver-based. Our speakers today will talk extensively on this. It is a management tool. It is not a measurement tool. We need to be wary of that, and this is a cultural thing as well. There's only one forecasting, which is the rolling forecast. There's no other 2-3 different tools. Traditional budget, forecast, and rolling forecast, no, just one. A balanced level of detail, not into X level of detail, tremendous level of detail, or average. It is very collaborative, so all of the organization is going through it at the same time. It involves advanced analytics as well. More importantly, it is automated. It's not done on Excel or any other non-automated tool. It has to be flexible and it has to be agile. I will not go through it in detail because of time, but our speakers today will take us through in quite a bit of detail on what they're doing in terms of rolling forecasts. So our first speaker for today will talk to us about move to rolling forecast. And to do that, we've got Ahmed Ezzat, who is CFO at MFQ Companies. And he will be talking to us about how he moved from traditional budgeting to rolling forecast and the key reason for doing that. So Ahmed, if you can join us, please, and take us through your presentation, that will be excellent. Over to you, Ahmed.
Thank you, Hans, again. So in February 2020, the whole world started to realize that COVID-19 is not a normal disease. It's a health pandemic which will change our future and change the way we do business and maybe forever. 1 month later, in March 2020, Saudi Arabia announced national lockdown. So while I'm sitting and working at home, I start to go back to my company ecosystem, like you will see in the next slide. Why I go back to the ecosystem? Because I believe that any operation issue is just a reflect or a shadow for a bigger strategic issue. Coronavirus is something will live with us between 3 and 5 years, maybe. So it's long-term threat. So I go back to my ecosystem, focusing in my core business area, like you will see. Try to answer question. This question is, will my company will be able to create value in the future or not? Or our business model, it is suitable to create value and free cash flow for our shareholder in the future or not? To answer this question, I try to find what is the critical drive behind the value creation in my company. And this lead me to 10 value creation driver, like we'll see in the next slide. This 10 value is not unique to my company. I believe it can be suitable for any company around the world. But anyway, when I look to these drivers, after I analyze my ecosystem, I realize that I can put it in groups. Means from number 1 to number 4, this is how to generate free cash flow and create value from operation activity. Number 5, how to generate value from investment activity. Number 6 and 7 is related to how to generate cash flow and create value from finance activity. Number 8, 9, and 10 is how to create value from better risk management. As you see, what I need now after I found the 10 drivers is I need one platform which can integrate it and consolidate it all this drive. In this time, I was using the traditional budget, like most companies in the Middle East or in the world. But I see that the traditional budget is not suitable to track and to give me a red flag about these drivers. So I think and I realize that I must move to adopt a rolling forecast. Rolling forecast is depending on what's happening now. It has the power of now. It helps the companies to reallocate the resources in a way which generate a maximum value and create the maximum free cash flow for the company. For adopting rolling forecast, you need one technology platform. You can't do this in Excel or on Power BI. I don't have any problem with Excel. I use Excel all my life, but for rolling forecast, it's not suitable because you need to generate data from different departments in the company and consolidate it and give result on the real time and tracking the value of the driver of the value in the company. So as you will see in my next slide, you will see some concern about adopting rolling forecast. This concern may be related to the mindset in our GCC area or Middle East area. The first concern that it will be require a real cost, time, and money. But this is not correct, because if you made any real visibility study, it will show that traditional budget is more consumer for cost and money and time for employee and require more employees. Second question or second concern about rolling forecast, it will be unwilling to adapt. This is the most critical issue in adopting real forecast, in adopting rolling forecast. Because you will face some old school guys in your company, they stick with the traditional budget for a lot of years, then they simply don't want to move to rolling forecast. The best solution in this case is to adopt a parallel running. You get result from traditional budget and result from rolling forecast, and then compare these results, and you will see what is the precious data which you get from real forecast. Another concern, number 4, or number 3, sorry, is too much time can be spent in rolling forecast, and there is not enough time to spend in action. And this is not correct, because rolling forecast is a tool of management. It's not a tool of control. Traditional budgeting is control tools. This is totally different, because rolling forecast give you the accurate data on the real time, so you can take the needed actions now, not after 3 months like traditional budgeting. Number 4, it is important to use expert who can implement rolling forecast. Yes, this can be in the first stage of adopting rolling forecast. But after this stage, you can provide to your team individual coaching, workshop, courses, seminars, so you can guarantee that they will reflect on the rolling forecast rules. Last concern or last question will be, rolling forecast does not really attempt to forecast the future. Yes, I agree 100% about this concern, because rolling forecast is not astrology. It is about to find the suitable driver for your business and track this driver. Try to assess the outcome from these drivers, and put plan how to deal with the outcome from these drivers. So on the next slide, I will show you one fantastic use of rolling forecast. Beside rolling forecast is about P&L. I think everybody agree about this point. But I use the same platform, my platform, to forecast cash flow also. And as a finance leader, one of the critical issue for us is how to forecast cash flow or how to manage the cash flow. It is very critical and it's very time consumer. We use Excel, a lot of sheets, a lot of time is spent on forecast cash. So I found that I can use the same platform to forecast cash flow. If you see, I have 8 stages. I review the cash flow, the forecast cash flow in 10 stages, as you see. First stage is confirmed income and outcome. I think all companies in the world is using this one. Number 2, 3, 4. I think most of companies which use cash forecast, they use it. Checks and non-confirmed bank transfer, due invoice and payment, and down payments, and that's all. What I use rolling forecast, I integrated the unrealized and accurate revenue within show in cash forecast. In stage number 6, I integrated the BOS, delivery notes, purchase order, quotations. So what happened when your sales manager start to make quotation on system, it's directly affect in your cash flow. You don't need to get data from him, then enter this data in Excel and see the result. No, directly. Stage number 7, I integrated the business plan, annual action plan, or short-term plan, however you called it. It's 1-year plan. I integrated and consolidated in review in cash flow. Stage number 8, I integrated the long-term strategic plan, whether it's 3 years or 5 years or 10 years, however you want. You can show your cash flow for 10 or 5 years one time when you go to your office in the morning. And I think this is a very fantastic thing to do. Thank you again. This is all. Thank you, Hans.
Ahmed, thank you very much for a great presentation. I think a few key points that I've picked up from your presentation is, of course, the challenges you've gone through, but much more importantly, you highlighted how you got out of those challenges, how you thought positively about, putting rolling forecasts in a very difficult cultural place as is Riyadh and Saudi Arabia. But also, much more importantly, how you put together the cash flow. So it's not just about P&L, it's all about three-way planning. We seem to have lost you there on the camera. Ahmed, if you can come back, please. And also the other members of the panel, I'd like to invite you back to give us some insight on Ahmed's presentation, please. Anand, if I may start with yourself.
Thank you, Ahmed. That was a brilliant presentation, and like Hans said, it's quite extraordinary to see that you have spent the time in the pandemic and then to look into your business, reimagine your business, and come up with a new way of managing the business. But of course, you implemented rolling forecast as well. It was the right questions in the pandemic. I mean, what areas can you add value on, and what areas can increase your cash flows. And you looked into your business, of course, with keeping in mind rolling forecast as your ultimate objective. You identified 10 key drivers in your business that can dynamically change your business outlook and then can add value to your business. That is a great example of how rolling forecast can really transform a business. Ahmad, that's an excellent story. Thank you.
Thank you, Arun.
Thank you, Anand. Naveen?
Yes, I completely agree with that. I think it's Ahmed's story highlights how a crisis can often be a catalyst to push companies to think differently. I mean, there isn't a single budget out there that survived the COVID pandemic onset. And if they did, odds are that wasn't a real budget to begin with, because they completely understated the potential results. So I think it sometimes takes a crisis, but I think it also, Ahmed's compelling results should lead others to think about not waiting for a crisis to consider this as an alternative to a planning process.
Thank you very much, Naveen. And finally, Andreas?
Thank you very much, Ahmed. Very nice presentation. I think it's a very good starting point also to see what technology can do, and that Excel and manual spreadsheets or manual process are not the right way to do rolling forecast. But I think we will hear more about that in the later presentation. Thank you, Ahmed.
Thank you very much, panelists, and thank you very much for Ahmed for a great presentation. Let us now move on and look at what our audiences are doing in this space. So if you would like to switch off your webcam, and I'm going to launch our first polling question, please, if you can vote. And the first polling question is all about what is the best description of your current forecasting process? First option, we do not do any forecasting. Second, traditional budget forecast based on accounting period. Third, hybrid forecast. We have both traditional and rolling forecast. And finally, we only do rolling forecast and use a snapshot for our budget. So please, if you can vote. First, we do not do any forecasting. Second, we do traditional budget and forecast based on accounting period. Third, hybrid forecast. So we're doing rolling forecast here as well as traditional. And fourth, we're doing rolling forecast. If you can vote, please. We've got 60% people have voted already. I'm now going to close, and I'm now going to share it with our panelists. So we do not do any forecasting, 5%. 48% traditional budget and forecast based on accounting periods. 38% hybrid forecast, so traditional as well as rolling. And 8% only do rolling forecasts within their business. If I can ask Ahmed and Anand to join us and give us some quick insight on this, please. So Ahmed? Ahmed, some insight from yourself? I think you might be in mute, Ahmed. If not, we move on to Anand.
Thank you, Hans. The results are quite interesting, as we can see that 38% use hybrid forecasting, and that's a good improvement. I mean, that is it shows that rolling forecast is gaining traction, and then there is a good opportunity for the remaining 48% who is doing budgeting only to transition to a rolling forecast. It's also great to know that 8% of the companies are only using rolling forecast. So they are clearly sold out to the idea of rolling forecast, and they have clearly seen that it has transformed their business. But of course, it's only 8%, and there is a great opportunity for the remaining ones to move on as well. Thank you.
Thank you. Ahmed? I think we've lost Ahmed for a bit.
Yes, yes, Hans. Yes, I'm here, Hans. Sorry. I'm very happy about the result, really, to know that 38% of our area is using both traditional and rolling forecast. Maybe in the future, they will adopt only rolling forecasts like I will do in 2020. Thank you.
Fantastic. Thank you very much. And it is quite encouraging to see that, you know, 38 plus 8, so 46% are currently using proper rolling forecasts. But that 48% is where we need to move. My big question is, what is the 5% doing? So thank you very much, panelists. Let me now hide this and we move on to our next bit. But before we move on to our next session, I would like to just remind our participant that please ask your questions and direct it to the presenter or the panelists you would like to answer. We will come to all of your questions, hopefully a few today and the rest by email, so please do so. Our next session now will be on success factors. And to talk about key success factors for rolling forecast, we've got Anne and Jocelyn, who is Cluster Director of Finance at Accor Group. So Anna, over to you, whenever you're ready.
Thank you, Hans, for the introduction, and great to be in this webinar. Good morning, good afternoon, and good evening, everyone, and thank you for joining this webinar. A bit more about myself. I'm a hotelier by background, and I lead the finance function in one of the Accor hotels in Dubai. I've been in this industry for more than 20 years, and most of it leading the finance function of different hotels. Over the last several years, I had the opportunity to oversee and implement the transition from a traditional budgeting to a rolling forecasting model in many of the places that I worked. Today, in this presentation, we'll be looking at the key success factors and best practices that helped us successfully implement a rolling forecast. Let's move on to the next slide. Looking back at our journey, I would like to categorize the key success factors into 3 key pillars. They are the people that are involved in this process, which is number 1 factor. Second is a technology that provides a platform to collaborate and automate the entire process. And last and most important is a process that puts everything together, the people and the technology, and then finally generates the rolling forecasting model. Let's talk about people in the next slide. It all starts with executive sponsorship. Transitioning from a traditional budget to a rolling forecast model started with the realization that we needed a change. The static budget, as well as we know it, has its limitations. It is resource intensive, takes several months to prepare, and due to the dynamic nature of the economic climate, the static budget was made redundant in many cases very quickly. The change in our case happened many years back. Senior leadership was convinced that we need to change and decided to implement a rolling forecast and make that transition. In our case, we started off with a 24-month rolling forecast along with a traditional budget that was updated on a monthly basis. Once we had the senior leadership sponsorship, the next key task was to make sure that we had the buy-in from all stakeholders and their participation. This means we need to realign the culture as well. And realigning the culture is key. And our goal was to ensure that the rolling forecast is not used as a measurement tool, but as a management tool that creates value. Now remember, preparing a rolling forecast is not just a finance function. It is in fact a function that requires collaboration from many departments that are involved. This is indeed a cultural change. Let's say there is a change in one of the drivers of a particular expense line that it is indexed upon, or an assumption about a top line that changes. And this is valuable intel that needs to be translated to our financial model in a timely manner. We needed a culture that, of course, would identify change in trends as and when it happens, and not wait till the end of the reporting period. And most importantly, collaborate with other departments and finance in a timely manner. We ensured that everyone who had a role in contributing to the process participated in the process. We started off with trainings and mentorship programs, focusing on getting all functional departments up to speed and fully committed to this process. We involved all the functional heads across departments, and they work closely with the finance team. Once we had the right people in place, we ensured that they're well trained. A key skill that we wanted is good communication and good analytical skill. This is critical as rolling forecast requires a team to understand the big picture, build a financial model based on these assumptions, and most importantly, communicate to the team in real time. This transition involved trainings and workshops for all team members involved. We had some new team members joining the team with new skill set, and some of the existing team members who reskilled themselves. Let's talk about technology in the next slide. Technology is a key element when it comes to implementing a successful rolling forecast. We were very clear in our vision, as we did not want rolling forecast to replicate the budgeting process, where we end up creating a budget every month. To solve this, we moved to technology for help. There are several elements that needed to change and to be made more efficient, and we need the right technology. To talk about an example, demand forecasting was something that we wanted to improve. We wanted demand forecasting to be done rightly, with more reliability, with more speed. After lots of research, we took the decision to invest in demand forecasting software that had the ability to automate several functions, which was traditionally a manual process. Other tools were added as well. This added efficiency to our process on many levels, not just in obtaining a reliable forecast, but also helped us become more agile and with faster decision making. Sharing data and collaborating with the team was important. We made sure that this was addressed in our tool, which could track versions and with many other features. As with many other companies, we still use Excel in some of the financial modelings, but of course we are slowly moving away from 100% Excel to a cloud-based solution. Let's talk about the process. Once we had the right people in place and the right technology in place, we then developed the process to put everything into play. When we developed the process, we wanted to make sure that the process by itself is very simple and easy to maintain. We can have the right people and the right technology, but the process is cumbersome. The rolling forecast is highly unlikely to succeed. In our initial stages of implementation, we faced challenges in terms of efficiency and the time taken for updating a forecast, making changes to it, recirculate the forecast, and collaborating the team to get the final numbers. This posed a challenge to the success of the rolling forecast, and at this stage, we took a step back to see where we can improve. We didn't want to implement a system that increased the workload of the managers and accountants. To prevent this, we re-engineered our process, eliminated data entry as much as possible, and automated several processes. Ultimately, we ended up with a process with a turnaround time of 3 days to have a forecast update. Having it driver-based is important. We spent a lot of time understanding the process, our business process, and to understand what drivers affected the revenues and the expenses. These drivers were then built into this model. And keep in mind, communicating this rationale of how and why these drivers are to the finance team, non-finance team, the operational team was key. And this communication ensured that the entire team was aligned and understood better what drives their business, what drives the expense lines, and what drives the top line. When our team understood what drives our, let's say, food costs or utility costs, they understood better the business. Timely participation from all key members is key. To ensure that every participant understood the role, we created process workflows followed by training workshops. This was part of the culture change that we spoke earlier, making the process quick and flexible and making sure that everyone was collaborating with the team in an easy manner. Once we had the process in place, we also ensured that the results were reliable in decision making. We did not want to have a rolling forecast that did not have the quality that we wanted. The forecasting accuracy in our case was key. We measure the rolling forecast accuracy on a monthly basis, and whenever we identified deviations, we made it a point to drill down and identify the root cause. This helped us fine-tune our drivers and fix it for future cases. In summary, these are the key pillars that helped us achieve rolling forecast. They are, once again, the people, the technology, and the process. To conclude, I would like to say that the rolling forecast really transformed the way we manage our business. From using it as a measurement tool, we use this as a management tool. This helped us in many ways. And ultimately, our leadership and management team has better visibility into the future business, and we can take decisions faster than before, with a higher level of accuracy than before, and focus our resources on the right tools that is needed. Thank you very much.
And thank you very much for a great presentation. I like really how you broke it into the three different pillars: people, technology, and processes. And really, to me, you know, what we've seen here, very striking on the last page about processes. So it's really important to concentrate on the process as well as and get those right when you move into the rolling forecasting model. So thank you very much for that. I would like to invite the fellow panelists to come and join us, please, and to give us some comments on Anand's presentation. If I may start with yourself, Ahmed.
Yes, thank you, Anand, for this fantastic presentation. Really, I agree 100% with you about starting with people, because most of my colleagues is asking me which platform you can use it in rolling forecast, but nobody asking about people. I think the most critical key success factor in adapting rolling forecast is how to change the mindset of people. So thank you, Anand.
Thank you.
Thank you very much. Naveen, can I come to you, please?
Yes, definitely great overview. And I also agree with Ahmed. I love the fact that you put people as your first key success factor. I think when you transition an organization from a more traditional budgeting process to a rolling forecast, you're going to encounter the cultural aspect of that. And that's very different for each and every organization, regardless of where you are in the world. I can't even take the things that I learned from my experience, you know, my initial experience, and translate it to my current company, because there are cultural differences. And so addressing that aspect and dealing with the people side of the equation and getting that buy-in from your stakeholders is so important. So thank you for highlighting that so well.
Thank you, Naveen. And finally, Andreas.
Yeah, and finally back to the technology. I completely agree with the people. Especially, I think you get more or better feedback from the people if you are using technology who is, like you said, simple and easy to maintain, because if it's not approachable by the people, then you have one big difficulty already. And you need the participation from all stakeholders. Means you need to have something for everyone in the company to understand not only financial but also operational drivers. So thank you very much. Very nice presentation, Anand.
Thank you.
Thank you. Thank you very much for all your comments, and Anand, thank you very much for a great presentation. Let us now move on and listen to what our panel, our audiences have to say in our next polling question. So if you can switch your webcam off, please. So let me launch this next polling question, which is all about how long does it take you, take your current forecasting process. So less than a day, first option. Second, 1 to 3 days. 4 to 7 days, 8 to 14 days, more than 14 days. If you can please respond, please. So for less than a day, 1 to 3 days, 4 to 7 days, 8 to 14, and more than 14 days. One of the good questions we are getting as well is about how often people do their forecasting processes, and the question is around why. So we will attempt to answer that later on, but we can see very clearly from here how long people take to do their forecasting. So if I may now close it, and I'm going to share it with our audience, 2%, less than a day, 18%, 1 to 3 days, 30%, 4 to 7 days, 24%, 8 to 14, but 25% more than 14 days. So 50% almost is between 8 to over 14 days. If I may quickly ask Anand and Naveen to join us and give us some quick insight on what we're seeing here. Anand, you please. To start
Thank you, Hans. It's interesting to see that 1 to 3 days, which is quite ideal, which is only 18%. I mean, there are some people who can manage with 2%. That is brilliant. But like you highlighted, more than half of it take more than 8 days to implement or to create a rolling forecast. That is something that we definitely need to improve. And then the various technology and various processes and various things that we talked about today in this seminar, and these can help improve this process. And one day we need to see that majority of the companies can do a rolling forecast with less than 3 days time. Thank you.
Thank you, Anand. And Naveen, your point, please.
I find this very interesting because I think it also depends a lot on what that process entails, whether you're doing your forecasting strictly in your FP&A organization or whether you're including a broader stakeholdership from across the business. And then clearly, as Anand already said, the technology you're using is going to make a difference in your ability to roll up forecasts quickly and create visibility at that company or parent level. So I think some of this is probably going to depend on how you actually have implemented your process.
Thank you, Naveen. Thank you, Anand. Great insight there, very definitely. Thank you. I will now hide this, and just before we move on to our next session, ladies and gentlemen, keep sending your questions via the chat box. We will attempt to answer all of them. So moving on to our next case study or next presentation, which will be given to us by Naveen White, who's VP Accounting at Hargray Communications. Naveen, whenever you're ready, take it away, please.
Thank you, and I appreciate the opportunity to share the case study of my experience at TW Telecom, where I had the great fortune to lead their FP&A function for 2 decades, the last 10 years of which we ran that publicly held company without any type of budgets and did all our planning through rolling forecasts. So I want to start on my first slide by just highlighting a few key thoughts before we get into how we actually did it at TW Telecom. One of the hardest parts of this is really considering what you're trying to have your forecast do for you. For us, it was really important to have a useful tool. The reason we went away from budgets is because our CFO realized that a once-a-year static planning process did nothing for us to be able to respond to the environment that we were operating in, which was extremely dynamic, constantly changing, and had a much shorter time horizon than a year for things to critically shift away, either through customer demand or technology changes. And so being stuck in a process that anchors your numbers to a once-a-year review, painful as that process is, really isn't useful in managing the risks and opportunities that come along on a daily basis. I think another important point is that your forecast doesn't magically reach a target number, that it actually is a true representation of what's going on in your operations, that your results are reflective of the current state of how your business is functioning, because otherwise you're again missing the purpose. It's not going to inform management as to action to take. It's also really important to realize that nobody can predict the future. The only thing you can do as a finance team is really take a look at what the drivers are telling you. And this is where I think it becomes really important that you focus on what drives your business. And that is hard work. It may not be the obvious things you think of, and it takes quite a bit of effort to think through and model out some of these various items and figure out is it your sales, is it your capacity, what is it that actually drives your business outcome. And finally, I think one of the key things for us was understanding that planning is so important, such a critical function for running a business, that it should be continuous. As we embarked on this process back in 2004, one of the things that I learned really quickly was that terminology and making sure everybody's talking the same language is important. So what I tried to do on this next slide is really highlight for you some of the key points of how I'm going to be referring to this as I present this case study to you. The forecast is really where the drivers and analysis are telling you that you're headed. That's a very different term than saying a budget or a plan or a target, and people use those interchangeably. So I think it's really important that as a starting point, you make sure as a business you're talking about what terminology you're going to use. Also, if your forecast magically makes it to your target, one of 3 things must be true. You're either really good at planning, or your target wasn't aggressive and ambitious enough, or your forecast is probably biased. Odds are your picture is going to look like this, where your forecast and your target don't magically align. And now comes the fun part, the important part, is really talking about that gap. because your forecast is telling you where you're headed. All things being equal, nothing changing in your business, that's where you're going to go. Now we get to talk about all the cool plans, whether that's a new product, opening a new market, changing some dynamics in your sales organization, be that more people or more training, but some different plan has to be implemented in order for that forecast to change direction and start heading for that target number. So I tried to illustrate how we did this at TW Telecom on the next slide. We moved to a quarterly rolling forecast process, and this slide says 5 quarters because that's where we started. It took some learning and some trial and error to figure out that we actually ultimately wanted a 6-quarter forecast, and we moved to that after about a year. What this graphic is intended to illustrate is that what we presented to our stakeholders, our frontline managers for our business units, was basically 4 quarters of actuals, which was represented here in the blue. Then they got their current quarter view, and we actually did this in quarters. It wasn't 3 months that added up, it was truly a quarterly number. So we'd ask them to update the current quarter, which is reflected here in yellow, and then add 2 more quarters to it. So why did we pick that horizon? Well, it's because we figured out, again, through trying it, that our frontline sales organization, our leaders in the field who are doing most of this forecasting work for us, didn't really have visibility beyond that. They had a really good sense of what's going to happen in the next 90 days. And then they had a pretty good sense for what was going to happen in the 90 days after that. At day 181, they got a calculator out and they really had no idea what was going to happen. And so the areas in orange here represent what we as a finance team then added to the forecast to create that 6-quarter rolling view, which we ultimately then rolled into our long-range planning. So the horizon depends really on what your stakeholders and the people who are inputting data into your forecast have visibility to. The other thing that's important is that the quarterly cycle worked for us because of the dynamics in our business, but that may not be the right thing for every other company out there. Depending on your cadence, your frequency of your sales, and whatever your key drivers are, you may need to do this monthly. You may need to do this weekly. It depends entirely on what drives your business. For us, the quarters worked, but again, we didn't know that going in. We figured that out after trying it a few times. Our first forecast going through was awful. It took a lot of realizing that there were a lot of things we hadn't learned yet that we had to figure out, fix, adjust, and try again. Our field business units, which where our revenue was forecasted 45 line items, again, on a quarterly basis. So it literally was like 3 numbers for each of 45 line items. We learned really quickly and actually decided before we even launched our first forecast that trying to do this at an account level similar to what our P&L looks like was way too much detail and really wasn't productive in terms of having people focus on that much information. Our corporate departments only forecasted 18 items because the reality was for the vast majority of them, the biggest item on their numbers was headcount, was people. And so by having them focus on just that and not creating a lot of work around items that weren't volatile, relevant, or changing a whole lot, it really helped us streamline the process down to engaging with our organization once a quarter. We gave them about 2 weeks to do the forecast, even though we know from our system logs that they really probably spent about 2 hours actually working on the forecast models because we had them at such a precise level of summary information that they didn't have to spend a lot more time than that actually getting to the numbers. So there's a lot of things that came out of the learning. You've heard me say a few times now that we tried things and we adapted and we reconfigured because we had to. I tried to capture a few of these thoughts here on my last slide. Forecasting is not doing a budget multiple times a year. Your organization cannot stay in the stress of that. It's really about having a call to action, about informing leadership that something is happening that they need to engage in and change. And it's a transformation. As I already mentioned, it's a culture thing and it's hard. Getting people to change their mind, getting people to adopt the new process is a very difficult thing, especially when it's something as core to business as budgeting. I mean, you saw from the polling numbers how many companies are entrenched in doing traditional budgets. You need to engage some type of change management. And it doesn't matter if that's something formal like ProSize ADCAR process or the Cotter process or the Heath Brothers or something that you've developed internally, as long as you implement some type of a change management support structure to make this process happen and gel within your organization. The executive sponsorship helps, albeit I'll say it's probably fundamental to making it happen. I was fortunate that our leadership team was very foresightful And they actually embraced the statement that I quoted here about how doing rolling forecast is a fundamental change in how we manage and evaluate our business. They rallied around that and supported this initiative, which made it not just a finance thing, it became a corporate initiative at that point. When we started down this path, like most finance people, I was bent on getting this right. And I learned that that's not a thing. You have to go at 80%. If you try to sit there and analyze it and plan it out to be perfect, it's never going to happen. Go at 80%, try it, expect to fail, quickly adjust, and try again. That's the best way to get your forecast to be a useful tool. And finally, I can't say enough about having a sense of humor about it and making it some fun. This is a difficult thing to do, but if you engage everybody at a level where it keeps it light and it keeps it showing the value of what you're going to do, you're going to be successful. Thank you.
Naveen, thank you very much for a fantastic presentation, but keenly highlighting, your experience with the couple of companies that you highlighted here. For me, focus on what drives business is one of the key elements. The other key element I picked up was the 18 items rather than 118 or 1,018 items to be forecasting. And finally, on this one, go at 80%, which is fantastic. Progression over perfection. So thank you very much for that. Let me ask my fellow panelists to come and join us and give us their insight into what Naveen has just presented, please. So if I may start with yourself, Ahmed.
Yes, thank you, Naveen, to share with us this hard and long journey about adapting rolling forecast. I agree with you that the important thing is people, again, how to change mindset for the people. And thank you again to show the difference between traditional budget and rolling forecast. They are two different things. So thank you.
Thank you very much. Anna, your point of view, please.
Great. Naveen, that was a great presentation. One thing that caught my eyes, implementing a rolling forecast is a fundamental change in the business. It really transforms the business. As you rightfully said, you cannot have one overview for the full year. You need to manage, if you want to manage the business, planning is a continuous process. You need to constantly evaluate it at the right intervals. You articulated the target and the focus and how you should use the right terminology. That is a brilliant presentation. And it's also great how you implemented collaboration in your projects, and the 45 line items that the organization does and the 18 line items that the corporate does. It shows that the drivers were clearly identified and delegated to the right people. And it's amazing that based on the logs, it only took about two hours to come up with the focus, and that's brilliant. Having the drivers is key, and then that really changes everything in the forecast. Great presentation. Thank you.
Finally, Andreas, your comment, please.
Thank you very much, Naveen, for that really extraordinary presentation, I must say. Right, I think the importance so that technology gives you the time to discuss all the topics, how to reach your target instead of reaching your forecast. That is something which is freeing up. So the technology give you a lot of, I would say, space to free up for especially these discussions and these scenarios which you are building around it. So very nice. Thank you.
Thank you very much for your comments, and Naveen, thank you very much for an excellent presentation. Let us now move on and go and ask our fellow attendees today question on barriers to implementing rolling forecasts. So I've just launched the question. If you can vote, please. So what do you believe is the biggest barrier to implementing rolling forecasts within your organization? Leadership and culture, skill set, resources, technology, and I've also added all of the above. So if you can vote, please give it another 15 seconds. Leadership and culture, skill set second, resources third, fourth, technology, and fifth, all of the above. If you can vote, please give it another 5 seconds or so, and then I will close it. So leadership, skill set, resources, technology, all of the above. I'm now going to close it, and I'm now going to share it with our audience. So I'll read it out quickly. 27% said leadership and culture, 4% skill set, 5% resources, 11% technology, And of course, 53% said all of the above. So if I can ask my fellow panelists, Naveen and Andreas, to join us and give us some comments on what we're seeing here. Naveen, if I may start with yourself.
Sure, I'm pleased that the audience is recognizing that leadership and culture is a critical part of this, but I also can't disagree with the all of the above. I think having the change management layer involved in whatever you're doing helps with all of those things, because it makes you really analyze and think through how you're engaging the right resources, whether that's a person resource or a technological resource, or a level of training and skill development that has to happen, or your leadership team. That change management layer is so important to making something like this happen. I can't say enough about it. And as finance people, I think we tend to shy away from that because it's often a function that we're not used to and not familiar with. We're really about dictating to people what they have to do versus enrolling and engaging them in a transformation effort like this.
Thank you, Naveen. And Andreas, your comment, please.
Yeah, I'm also very pleased that the people are mentioning all of the above because the technology is already there and can be used. So I completely agree with that 11% is not the biggest barrier if you have it, but we will find a lot of ressentiments inside a company when we talk about leadership and culture. Skill set can be trained if you have the technology, but the resources to be available in leadership and culture is a very important point in all the projects when you're delivering the new technology for the rolling forecast.
Absolutely. Thank you very much both for that. And of course, you know, culture, as we can see here and being mentioned all the time, 27% leading there. So thank you for your comments and your insight. Let me just hide this, and we will now move on to our next session. So just before we move on, please carry on sending your question. We will get to it, of course, in due course today, if not by email. So I can see Andreas is very keen to present, so he's come on the camera. So let's move on to our next presentation, which is all about technology and how technology can help us do rolling forecasts in this current world. And to do that, we've got Andreas Simon, who's Director MEA at Jedox. Andreas, over to you.
Thank you very much, Hans. Always a pleasure. Yeah, when we are going to my presentation and open up the first slide, we will see that the world, we already saw that in a lot of presentations before. The world is changing rapidly. It's not only globalization and digitalization, which is increasing the demand of increasing speed of change, but it's also the pandemic, which was recently very heavily impacting all the economics. And we saw that in the presentation from Ahmed that it forces him to go into the rolling forecast because it has a business impact, of course, and a very big business impact. And doing a budget planning only once a year, it's not anymore the point. So we face a market with ever-changing requirements, which forces companies to react and adapt more and more quickly to the new circumstances. And not only that, also the volume of the data and information we have to go through and is increasing exponentially. Too often, this data, unfortunately, is coming from many often isolated systems. The data available on management usually has a strong financial focus and thus does not consider the entire operational and value drivers in a company. And when we go to the decision and planning process, the decision planning processes are often very slow due to manual and Excel-based processes. I've seen in my 25 years of EPM so many Excel-based, I would say, planning applications where there are hundreds of Excel sheets are connected to each other, with, of course, a lot of error-prone failures inside. So on the one hand, you have to be very fast. On the other hand, the systems and processes does not allow you to be very agile. So that is the first thing what we are coming to. If you are looking for an enterprise performance management, you need to look for agility and flexibility. And that is what we're seeing on our next slide. So this is required for rolling forecast. You need to plan and manage your business like you'd have done it always. So because the management process have not changed generally. But the difference is that the circle is turning faster and faster. Therefore, we need that platform or the technology who is giving us the chance to be faster. And not only that, we have FP&A. Now we have the new term came from Gartner with FP&A, the extended planning and analytics. And that means that you're not only working in the Office of Finance, but you're also trying to understand what's happening in the operations. Because today departments along the value chain must be integrated if you want to understand the impact of different activities on your result. So finance data need to be combined with sales, procurement, HR, supply chain. So the impact on the rolling forecast is we face a market with ever-changing requirements, with forces, companies, etc. So when we are going about make better decisions with more agility and speed is when I started 25 years ago, we had a very, very rigid top-down approach. Yeah, that was the main thing in FP&A. Then we came to the traditional FP&A where we have now annual planning, quarterly forecasting, data, top-down, bottom-up, which was enabled by Excel environments, etc. But the new area is now coming with FP&A. It's business partnering. The CFO in the Office of Finance is helping other departments in the organization to understand their drivers. So we want to go from annual planning to continuous, and we heard that with Navin and with Anand. So we want to go to continuous real-time planning and forecasting. We want to understand granularly operational model and solutions and not only more high-level financial plans. And we want to be driver-based and scenarios. And we want to have a platform for strategic, financial, and operational plans. When we look in terms of the next slide, what are the three different topics which we are supporting? So in modern enterprise performance management platform supports the entire journey to this digitalization, because what you're starting first is you want to automate all your planning, forecasting, and reporting processes. You want to get your spreadsheet chaos under control and increase the efficiency, not manual entering anymore, or creating the manual process and flows. You want to be automated. The second step is when you have done your automation, you want to have a collaboration between all the different entities, departments in your organization. You want to have a perfect platform to combine different planning areas, forecasting areas, to collaborate across the business, not just build only planning applications or forecasting applications for sales and finance. Flexibility in a platform is the key for that. If the platform is not capable to support forecasting capabilities outside of the Office of Finance, then it's the wrong one. So please keep a look on that. And at the end, I would say the cream on top of everything is that you want transform planning to create new value, respond faster. Even you want to have a new collaborative approach, and you want to have this continuous planning. We heard about it, rolling forecast, predictive forecasting. You want to use artificial intelligence, machine learning, looking for patterns inside your databases, which is reducing your time on the rolling forecast dramatically. That can be all done automated, or at least a lot of it, so that they come away from the 8 to 14 days and what we have seen, and around 8 days of rolling forecast down to only a few hours or 1 or 2 days. So they're very important to use this new technology and to have a platform who is supporting that. On the next slide, when we see the streamlining the planning and the analysis report, going back to the first step. So you see without modern platform, you have all these manual process. With a modern EPM platform, we have a data integration, which all the data silos you want to integrate. Very important that this is so flexible that even if you're merging or you have a new idea, you can integrate all your data, which is necessary. And then you have a workflow included, which gives you the approval, reject, all the automated processes. That is what you have when you want to streamline your planning, analysis, and reporting. You don't want to have the discussions anymore if this spreadsheet is a version final, or final 1. Everything should be the single version of the truth in one system with all the data and all the application inside. When we go to the next slide, then when we have done, like I said, the automation, move to a more holistic performance management approach, collaborative across all the departments, improve planning, forecasting results by integrate finance and operations, collaborate and harmonize forecasting processes and workflows. So we want to go to a driver-based forecasting process with seamless data, model anything and implement changes quickly. So model anything, flexibility, agility, and implement the changes which you have very quickly to give you early warning indicators, processes are harmonized, connect forecasting, for example, with BI, So they had in-depth analysis tightly integrated in one tool, or the tool allowing you to integrate with BI tools you have already inside the company, and gives you the insight which you need to discuss how you come from your forecast to your target which you would like to reach. In the next slide, we see then the later stage when you want to unleash even more speed and increase agility, where you have the increase of forecast speed, down from 14 days to 8 days, one rolling forecast, and accuracy for better decision support. So free up resources with automate continuous forecasting. You need all these resources to discuss the results and discuss the strategy how to reach the target. Understand the impact of changes for the entire business, not only for finance, ensure sufficient size and quality of data sets. So what you want to use is easy to use and transparent machine learning and AI, artificial intelligence, with assisted forecasting, like with using data preparation wizards and engine. So to automate a forecast, you can use pattern of how business is developing continuously, understand the impact of changes, analyze drivers and patterns, and check quality and refine data automatically. When we come to the slide, next slide, we see that there's a lot of different companies you can put in one of these three buckets. So there are companies who started their automation process and moved away from the manual and Excel-based performance management system. Then you have companies who are already in the collaboration approach, who are doing FP&A, collaborate between the different departments, adding data from operational planning, forecasting to their financial forecasting. And then you have companies like you see here, Siemens, who are already using AI and machine learning for replacing manual forecast with driver-based automatic forecasting and achieve a real-time forecast with more than 90% accuracy. Fascinating. That is a way we have to go. If you look at the final slides as a summary, if we want to go to modern FP&A, if we want to use rolling forecast, we need a platform which allows us to increase the agility of our forecast, of your forecasting and performance management. We want to have flexibility. We want to free up productive time to perform high value analytics and simulation. And we want to understand the impact of changes across the entire business, not only finance, to speed up time for value for financial and operational application and reduce the dependency on IT and give the business more time to analyze how they reach from the forecast to the target. Thank you very much.
Andreas, excellent presentation. I wish we had more time to give you. Of course, you put a massive argument for technology. We all know why we need technology, because there is so many things happening, and we've got so many questions in relation to not just technology, but the answer to those is very much around, yes, you're wasting so much time doing all of these things, because if you had a platform that could take away quite a lot of the pain away from what you're doing and put your effort into value add stuff. So absolutely, thank you very much for that. Let me call upon our panelists to come and join us and give us some insight into your presentation. So Ahmed, if I may start with yourself first, please.
Thank you, Andres, for this great presentation. When I said Excel and Power BI not involved in rolling forecast, I believe some people was surprised, but you clear why this is not involved. So thank you. Actually, I think as the finance leaders, our main role in the time of pandemic is to contribute in the innovation of business. We must support the innovation, support the technology, and support the decision making in companies, in our companies. So thank you.
Welcome.
Thank you, Ahmed. Can I come to you, Anand, please?
Thank you, Andreas. That was a great presentation where you highlighted agility and flexibility as one of the core values that we need to ensure that we have the right technology in place. Of course, something that you mentioned is all departments must be integrated. I mean, having a successful business model, having a successful management tool it's essential that all departments are integrated, and technology is the right tool to bring all the departments to be integrated. You also touch base on FP&A, the next level that FP&A can take us to, and how a technology can help us reach that level. And that's a great achievement that every organization can do. As you said, if it can be automated, it should be automated, and that gives great efficiency to the process. And this frees up a lot of time for the individuals in question to use their time for something more value adding, and rather than updating numbers, having mistakes, fixing mistakes, etc. And how we can use predictive index and etc. to move on forward. Thank you.
Welcome.
Thank you, Anand. Great insight, and thank you very much. And finally, Naveen, to yourself, please.
Yes, thank you, Andreas. It's always exciting to hear how far technology has come since we first implemented a forecasting tool. Gosh, it's been over 10 years since we did it. So the AI and just some of these aspects are really exciting. I think one of the things that resonated for me with your presentation is this idea that planning isn't just about finance, that it's really about the broader environment and other organizations. And I think one of the compelling ways you can get your operational teams, your sales teams engaged in that process is to think about this FP&A approach. If you make the planning about them and help them figure out how to translate the drivers that they're already forecasting for to manage their own business, because they're all doing it, whether they're doing it formally or informally, they're all managing some type of a driver, whether it's how many salespeople they have or their manufacturing capacity or whatever it is. If you can help them figure out how to translate that into the financial outcomes and make the planning about them and their processes instead of it being a finance process, I think you can overcome a lot of these cultural dynamics that often are seen as a roadblock to making progress on a rolling forecast.
Fantastic. Thank you very much, Naveen. Thank you, panelists.
Thank you,
great comments there.